Hello, everyone, and welcome back to Crypto Live League. My name is Ken, and today we welcome back Phil Champagne to the show here from Hayek Lab. How are you doing today, Phil?
Thank you for having me, Tim. Doing fine, and you?
Yeah, it's our pleasure to have you back. And again, this is a series of interview videos we're doing with Phil. This is our second video in the series, and today we're going to be talking a lot about Tezos baking and XTZ bond requirements for that process. So some pretty exciting stuff going on with Tezos. We just had a recent news update video come out, and this is a more technical topic today, Phil, and it's an important topic. Do you want to just tell us a little bit why it's important, and we can hop right into it?
Yes, it's important, in fact, that the first 64 cycles are going into a ramp-up phase where the deposit requirements are increasing for the Tezos. The rights to bake a block are tied up with the baker having to put up a deposit, security deposit of 512 Tez per block and 64 Tez per endorsement. Well, it'll be that amount starting cycle 64, and it's slowly ramping up from cycle 0 to 64, a linear ramp up to that. And there's a reason why they did that. But if you don't have those bonds, you're not going to be able to bake the block. So it's very important for bakers to have those things. And it seems like a lot of them are going into over delegation where they don't have enough TES matching up where their staking balance and the baking rights they got.
Right. So this is sort of an update on the current status of the Tezos blockchain. So for those of you that don't know, when a baker is participating in the staking process, the baking process of Tezos, there is a bond requirement per block and also per endorsement that occurs in each block. There are 32 endorsements. So this is a moving target, an increasing target all the way up until cycle 64, where there'll be a fixed rate of 512 XTZ for baking one block and a total of 64 XTZ for all the endorsements per block. So that gives you, as we see here on the slide, a grand total of 2,560 XTZ that'll be needed at that fixed rate once we hit that to put for deposit for every block. So there's a cycle according to this as well, though. Do you want to just walk us through the timeline of how we get to this lockup of bond and basically where the requirements kick in?
Yep. So on the next slide, the slide 2 that I have sharing with you, we have on this thing, it's actually taken from the book. It's Tezos, the Essential Tezos that I'm writing right now. The slide, in this case, the cycle 100 is where you would have those snapshot taken to evaluate what will be the baking rights available for each baker. And 101 is where there's a commitment that are revealed. It's tied up with a random process for selection. And then beginning of cycle 102 in this chart is showing is exactly we know what are the endorsement baking rights of each baker. But in that, they'll know right up front how much bond they will need to put up to be able to satisfy those rights and to be able to they have been granted rights. They need to put up the bond and deposit at the time the block is baked. So at cycle 107 is where the baking happened. Mm-hmm. And say it's right in the middle of 107, you have a block that you've got granted for baking. So then you need to put that 512 TES. And it's going to be frozen for the rest of cycle 107, and will be released only at the very end of cycle 112 or at the beginning of the cycle 113. And so that's the duration of this. So we see that it's somewhere between 5 cycles and 6 cycles, depending on when the block was taken.
So it's a very long process for the entire baking cycle to complete, where you have, again, in this example here, you see the first cycle is when the snapshot is taken, commitments revealed in the second cycle thereafter, and then it's a new number of cycles pass before you get to the actual cycle where the baking takes place, and then that's when the bond is required that we're talking about here, the 512, and then also for the endorsements as well during that 107th cycle here in the example, and then it's held for the number of cycles thereafter in a lockup frozen period. So both the rewards and the bond for 5 cycles thereafter. So this means the entire network that's participating in baking as a whole is going to have to increase the total number of XTZ that's tied up in this frozen period for this process of baking here as we work towards that fixed number of 512 per block. And again, this is going to happen on cycle 64, which you're projecting to occur about what time frame is that?
January 2019, somewhere in January. Yeah.
So definitely. So this is almost begs to ask the question, what type of effect might this have on the network that we're seeing bakers going to need more XTZ to have for this lockup, for this frozen XTZ period for the bond?
Yeah. So just before heading into that, on that slide too, just so making sure people understand, this is a sliding window because cycle 108 will also be a baking block with its own set of baking, where instead of the snapshot of cycle 100, it's the snapshot that is taken in 101, that will be for 108 and so on. So it's all every cycles have the same relationship that we see here. So that means that you have a total of, during cycle 108, you've got the cycles, all the deposit of cycle 107, 106, 105, 104, and 103 that are all tied up in deposit at that time. So that means that the slide 3, we see that there's at the beginning of every cycle, there's then the prior 5 cycle before that, all the bonds that were deposited or released. So you've got a 52.4 million TES that I've in deposit at that time. But at the end of every cycle, as more blocks are being put in deposit, more TES put in deposit for baking every blocks through that cycle, at the very end of the cycle is where you have the highest amount of TES in deposit, almost 63 million TES. And then the cycle repeats. And so it's a little bit over 5 cycles. So the highest pressure that you have on the network, we can see it as the Tezos network is making its own demand. When you think about offer and demand, the Tezos network creates an artificial demand for TES in terms of deposit, and actually that is going to be increasing to cycle 64. So that's to tie it up to your question is what implication is going to have on the network. We can cover that a little bit more details.
Yeah, so that's interesting. It's important to note that at any given time, since we are already well into the cycles of mainnet, that there are this artificial demand for XTZ for the locked up frozen bonds that we see. And every cycle, you can estimate there's about 10 million XTZ, give or take, a few 100,000 there. So the 5 cycle total is around that 52 million. And as we go into the 6th cycle, it can keep adding additional TES required for bonds until you get to the release point of the original cycle there. So it is important to note that it is a sliding scale, that this timeline does exist in the same terms for each different cycle as we continue forward.
Yeah. Slide 4 is showing, illustrating basically what this variation means. You always have goes from 52 million to 64 million, 63 million, and then release a little bit, and then goes back up, and so on like that. Yeah.
Yeah, as there are each block being baked leading up to the end of that cycle, and then you have the release, and then it starts over again leading up to the end of the next cycle. So that's a great graphic there that shows that's basically the stress put on delegation services or bakers that need to acquire XCZ to lock that up for their bond requirements.
Yeah, and that's the key here is that the pressure on over delegation is more likely to happen at the very end of the cycles on every baker. So if your baker is really close to over delegation, you're going to see this side effect at the very end of the cycle where some blocks might not be possible to be baked by this baker. He's got this right. He's supposed to get those blocks, but he's not. He put all the deposit all the TES prior blocks within that cycle, and then the very end of the block of the cycle, he doesn't have the deposit anymore, so therefore he's not able to get that
And
big
this,
dead block.
and this is actually happening a lot. We see, for instance, mytezosbaker.com, which is a list, an aggregate list of some of the baking
Yeah,
services, and it shows that there are numerous services that are over delegated,
yeah, and it's growing.
and it's growing. So it's an increasing problem with the Tezos
Mm,
network.
yeah,
And maybe this is just a knowledge gap where the people that are entering the market for the first time and are delegating for the first time may not know to check whether or not
yeah.
the baking service they're trying to use is over delegated, and therefore they'd miss rewards because they don't have
Hmm.
this XTZ available to stake the bond when they're
Hmm.
selecting the bake.
Yeah, it's a challenge because they're getting to know about Tezos. They learn the essential of it. Oh, delegation, interesting. And then, but then they are not aware that those additional layers of information that is needed to acquire. So as we keep going and expanding into the amount of resources online available, and the videos like yours will help educate people in that regard.
Exactly, yeah. And for anyone that doesn't know, Phil is writing the book, The Essential Tezos, which I just have a small print copy here, and that should be out in the next few months. And it does go over information like this and offer some of the details that result in uh, sort of negative things for the protocol, or whatever the detail may be. In this case, over delegation would be negative, and it would show you how to work around that and how to avoid that from both sides of being a baker and then being someone delegating, what you can do to
Mhm.
avoid entering scenarios like that.
Yeah.
And you also have a nice graph here that is comparing bond requirement as a percentage of total staking balance. And this is sort of a sliding scale curve here, where there is a variable, which would be the amount of network that is staking. And that should change the percentage of overall bond to total network. Do you want to
Yeah,
give?
yeah. So so what you see at the bottom of the chart is the gray bar is the amount of bond that is needed, and we see it. And I've done it all the way to cycle 47 on this thing. We're a little bit beyond that. It's just a week old, this thing. But at cycle 64, that bar will be fixed. It will not grow anymore. But it shows the total amount of TES in rolls, the total amount of roll staking. On the right side, the blue line is showing the number of rolls, so it's in rolls, 10,000 TES. Now, the blue part is the total amount of TES that are staking. And obviously, in the very beginning in cycle 10, it was, as we see somewhere, like 26,000. So that means 260 million TES that were actually being involved in the staking. And that means a combination of bond and in combination of just in KT1 address. Overall, that's the total amount that were available at that time. The percentage, the bond requirement was a little bar at cycle 10. It was very small at that time. So that means that was in relations to the total amount of staking balance around 4%. Now imagine if it was a full amount of 512 TES as it will be cycle 64. That means that this red bar here would have been something like 14, 15, or
Much
16%.
higher.
I've done the calculation, but it will be quite higher, or maybe even 20%. And that means the pretty much the fact that there were so few tests yet that had gone through KYC and all that, there will be all of it will have to be involved in the bond pool, bond deposit. So that's the reason why they went through that slow ramping up to cycle 64. But now, as we see, the blue line shows a variation of how much staking balance that came up. And we see a little bit of a bump at cycle 20. I think it's cycle 19, yeah. And that actually made this ratio a bit flat on that time, but then overall it kept ramp up. And now, actually, we're above 10%, which is above that famous 8.25% we've heard so often. But it's just to point out that 8.25 is more of an artificial derived number, and it's not really the real number to look for. It really depends on the current situation that we have overall in terms of staking participation.
Right. So that 8.25% number, it's not going to be like a fixed number. It's going to be, you could call it almost a liquid number, because you're not going to have 100% of the network activated and staking at the same time to make that 512 number reflect that 8.25%. So let's say you have only 50% of the network staking, right? So
Yeah,
then
well,
obviously
yeah,
that
we can
512
say,
is a much higher percentage, right, of overall bond requirement to network. And it is smart that they did this in the beginning to ease into, to reduce the stress on bakers in the network, not have such a high percent required for the bond in the beginning. And
mhm.
then as the network matures, then they can work to that target goal of that 512. So very
Yeah.
wisely
Uh-huh.
designed to help with the network adoption.
Yeah, and then the next slide, slide 6, is actually showing where that 8.25% applies. Uh, these are per year, and it shows, well, it's not the real value for the year 2018. It shows 8.25%, but the fact that we're ramping up, it was not really the full 512 TES. It's actually lower. But if it was 512, then in relation to the total amount of supply, in total supply of Tezos, 760 million, then it's 8.25%. This number is more like that theoretical, that orange line, theoretical lowest amount in percentage that you can imagine that the bond requirement would be. Because if there was, assuming that the total supply of TES were involved in the baking, then it'll be 8.25, but it's unlikely that all of the Tezos supply will be actively baking involved in the staking balance, and therefore the percentage is higher and will always be higher than this curve here.
So this is the blue line, assuming that total supply increases every year based on the fixed inflation rate. This is assuming there is no change in governance to that fixed percentage rate of increase inflation. So this is a unique characteristic to Tezos that's always going to be the caveat to any kind of future projection, is the unique governance aspect allows users and holders of Tez to make changes to any minute detail within the
Mm-hmm.
protocol. This is very interesting. I mean, you even saw other communities have problems around minute details in protocol. Like, let's just, for instance, Bitcoin and Bitcoin Cash had a conflict between block size, and it's
Mm-hmm.
something simply as that split their community.
Mm-hmm.
Something so small, minute
Yeah.
detail. Here
Yeah.
with Tezos, they give you the ability to come to a consensus on different areas of
Yeah.
contention, such as inflation rate or even bond requirement could be changed. So, but these are
Right.
using the current fixed rates that we've identified, the projections you've
Mm-hmm.
made here, showing that the possible bond percentage to total network could be a lot lower as the inflationary aspect of the total XCZ grows throughout the year. So it theoretically should reduce stress on bakers in the network as we mature as a network for
Correct. Yes.
bond
Yeah.
requirement. Yeah.
Yeah. That's correct. It's very important to make that mention that we're assuming here the number for the deposit is going to be fixed at 512, and in this case, this is what you're going to see. But if there's any in I don't know 5 years from now they discover, oh, we need to adjust the bond deposit either up or down, or I don't know whatever that is, then these numbers will change. But
Mhm.
the fact that we have a growing supply, then obviously yes, as according to this, the total supply of TES will increase, and therefore it'll be easier for bakers to get the required TES to put in the bond pool if there are more TES out there. And so the ratio in terms of relation to the total supply, it will go down. So therefore, a little bit less of a pressure on that.
And so this almost, as you say, bond pool, that almost brings up the next slide here, where you have the two types of XTZ. You can almost
Yeah.
categorize XTZ in two separate types. You have the more liquid type of XTZ, which is just held in a regular TZ account or even in a delegated KT1 account. But then you also have this secondary class of Tezos, which is the bond pool Tezos, the bond pool XTZ.
Yes, and this is this brings a point because there are so many aspects to Tezos that the dynamic overall that people are learning. And so I see that people from who are focused on proof of work as the only one, and it's that's it. There's nothing else, and proof of stake is bad, and so on. They criticize, but the thing is the bond or a baker that starts and will need to fund the bond deposit, the bond pool, so that they can supply the bond deposit. But the fact that every cycle keeps asking recycling, you can constantly have new requirements when you want. So it's almost like it's a fixed investment, like if you were investing in real estate. You hold it for, it's very not liquid. You hold it for 5 to 10 years or maybe 20 years. It doesn't matter. The point is that it's very long term. And it only thing is it brings you cash flow. Every month you have income from the rental. Now, for bakers, it's the same thing. You put up and it's a fixed amount. And those TES in the KT1 address, it can be moved to the exchange. It can be used for making a payment to somebody else. It can be used to pay for a contract or anything like that. But the TES that are in the delegated address for a baking node, they need to be properly sized up in relation to staking balance and to be able to be sufficiently there to respond to the baking rights that will be required to with their corresponding deposit. So that means that if the two were actually traded separately, if imagine a world where they could be traded separately, there will be a higher return for those TES in the bond pool that will be required by the market will obviously put a higher return. It's like, well, because of this restriction, we expect to have not the 6 to 8% or 9% return that delegation happens to have right now, but they will prefer to have something like 15%, because of this restriction. And so that's one of the reasons why you consider baking fees as just not for operating the node, but also to provide for the compensation for those TES that are with this restriction.
So yeah, that's a very good point here. There is, definitely a higher value placed on the TES that are required for the lockup period to be frozen as bond, just because you have the lack of liquidity of them. So that's if you wanted to make a sell order during that time frame, well, you couldn't because they're frozen for this process. So that begs the question: well, what if you theoretically could trade both types of Tezos? One that's in this delegated address that has a potential to be locked up or is locked up on the rolling basis,
Mm-hmm.
and the other that's freely movable with 100% liquidity. That's either in a regular TZ address or in a KT1 address, could be delegated. How would you even trade that because it's locked up, right? So you'd have to come up with some sort of future instrument or market derivative to trade the second class Tezos, the second class XTZ, and would that actually go at a premium price to the actual market price of the regular XTZ? Very
Yeah.
interesting.
But I prefer this situation than as the situation that we talked before in the prior cycle, where a prior conversation, a baker, a Bitcoin miner, has to put all this heavy investment into a stack of Ash ASIC computers. While this will not increase in value, it's actually going to depreciate in value as the more better performing ASICs going to come up on the market. So in this case, even though it's frozen, those TES will gain value as the same thing as the other TES anyway, because it's always possibility of pulling them out with the rewards themselves. So therefore, at least you have a gain for the long-term gain of Tezos. You have an appreciation possibility here rather than just a depreciation as the ASIC.
Yeah, so that's a great comparison. So again, Phil, being the associate here with Hayek Lab, the baking service for Tezos. For any of you that don't know, you can go over to hayeklab.com right now and check out all the services that Phil provides there. But basically, he's showing you the cost of being a baker. It's actually having the bond, the XTZ. So the cost of being a miner for Bitcoin or Ethereum is the cost of the ASIC computing power that you're using to calculate verification for the network. With Tezos, it's actually you have to go to market or find a way to possess the XTZ that's required for bond. So it is the actual asset that you're actually getting rewarded for in the end as well. So where's the money flowing? Where's the profit flowing? Where's the requirement flowing for barrier to entry to these processes? Well, in Tezos, it's the XTZ. In proof of work, Bitcoin, Ethereum, it's in the mining equipment. So very interesting to compare the two and to show you what the crypto economic demand is in each case.
Yeah, definitely. And there was a chart that I forgot the company or the it was shared on Twitter. I think you mentioned that in your previous video, comparing Ethereum mining to Tezos, and it was very excellent. You probably remember.
Oh yeah, that's at TZ Bake Oven, I believe it is,
yes,
on Twitter.
Correct. Yeah,
and they had that great chart showing the ROI.
Yeah, no, that's good. All the details on that. Yeah, very excellent.
Yeah, and so we also have that website that we talked about earlier. It's that mytezosbaker.com.
Yeah.
And it's a great resource to see which services are over delegated or which can take more XTZ for delegation. And Hayek Lab, I believe, does have some space available. And you guys are feel free to check them out. Again, hayeklab.com. They're a great service. They offer very competitive fees, and they offer bond pool as well, which is a different service that actually allows you to get a higher rate of return on your XTZ. Do you want to go into that a little bit and talk about 2019 and beyond?
Yes. So yeah, 2019 and beyond. Yeah. So 2019 will be an interesting year because, as we saw in the chart, it will be the year where the highest demand for Tez will be, because the supply will not be as high, but the full cycles of 64, which starts in January 2019, will be the full bond requirement will be active starting in January 2019. No more ramp up, will be at the max. So from there on, all it will be is the additional supply of Tez that will slowly decrease that. So the 2020 will have a little bit less pressure on the bond because there will be more supply of Tez available, and it keep going down. But 2019 will be a very, very interesting year for that because there will be the highest demand for bond. So there'll be there's highest demand, basically.
So what happens
very important
essentially when one of these bakers is over delegated and they're selected to bake a block, but they don't have enough XTZ in their bond pool for the requirement.
Yeah, so it's very important to know how the bakers are funding their bond pool, and so that and how much they're funded, and if there's not going to be a requirement for them. So I have to extract 100,000 Tez or 200,000 Tez because one of our investors decide to pull the plug. So basically, suddenly they're over delegated, and you're in vacation somewhere, and you don't want to have to constantly look for this kind of thing. So there'll be possible interesting impacts. I mean, we've seen xtez.io or something like that in the beginning, that just actually very beginning of the baking went out, and that was very peculiar that it'll be so early in the phase. But we might see that again. I don't know. It all depends on the situation. And so there are actually some multiple Sunday slide 9. 3 solutions that I had conversation with my partners that we had 2 months ago, basically, about what are cases want to expand our bond pool, what are the solutions. One of them is the self-bonding, and there's already some companies are doing this, and that's where a portion of a delegator will be delegating to itself and with a much lower fee. And we're thinking about lower than 5% in our case. And this will allow them to provide the requirements for the bond themselves. And so normally a bond, if you're investing in a bond, then the relationship is tied up with the delegators. The delegators are coming in, and now they require your bond, and you cannot leave, otherwise the baking will go away. And they're saying, if the delegations goes away, then you can remove those bonds without impacting anyone. So, but if you're the self-baking, then you could, okay, I'm going to remove my KT1, my bond, my Tez from my KT1 address, and then now I can remove my bond, my Tez in the bond, because now I've just released the pressure. And so that's how you can. There's flexibility. It's the liquidity is minus the time for the cycles for the bonds to be removed from the security deposit. Because they'll be frozen in the bond, but eventually after 5 cycles, all of them will be returned. So that's one aspect. The other one we talked about, and I also saw another company doing, is a smart contract where you would have the equivalent of a share or a token for all the TEDs that are available in the bond pool of the company. But again, this is a derivative, and it's just a way of being able for, as an owner of TES in the bond pool, to have some sort of a liquidity, but it's tied on a per company basis. It's in a relationship of how much you can trust that company and so on. And the third one is where you have private investors that are ready to invest in these things, and they look at it as a long-term investment. It's not going to be for 3 months, whatever, but it's like perspective. It's like for 2 years or something, or just like if you invest in real estate.
And you just would have to trust the third party that you're dealing with, because you're actually having to transfer ownership of the XTZ.
Correct.
This isn't like a KT1 address where you're delegating. This would be more just like handing over your Tezos.
It's not for everyone.
Right. But then
some people prefer to have the luxury of having their KT1, their Tez in a KT1 address that is tied up with their hardware wallet. And those are willing to accept the risk that is sort of equivalent, or maybe less, more secure than having in an exchange, because an exchange has to have access to everyone, while the baking node is isolated in some way. It has there's no website related as much. So there's a little bit of less of a hacking issues with the because you can separate the two, but there's still an aspect of security that is involved in this. So those who are not are not interested in that, then they should stay with the KT1 address or invest in their own bond themselves.
Yeah, you bring up a good point. I mean, it's no less insecure than dealing with an exchange that has your private keys, for instance.
And a little bit more secure, I would say, but yeah.
A bit more secure. And the idea that I really like that you're touching on here is, say you created a token, well, whatever, call it Hayek Lab, XTZ, whatever you wanted to call it, and it represented, for each token of Hayek Lab, XTZ, would represent one XTZ held in the bond pool, right? So it would actually, let's say it was trading on a secondary market. Let's say you had to, for any reason, you had to have more XTZ enter your bond pool. Well, then you would mint a new Hayek Lab XTZ, or you had to remove an XTZ from the bond pool. Then you could burn a Hayek Lab XTZ token. So let's say you kept track of it to the T, where you had a 1-for-1 relationship, and then you had maybe a secondary market. That would be your futures contract. That would be your derivative, that Hayek Lab token that was created, because that would have the value of one XTZ staking in the bond pool. So it would be trading at maybe a premium to the XTZ price if it was trading in a secondary market. So there you go. That's the solution that you've come up with. Seems like a very viable way. You would just have to trust yourself, the central authority in the technology. You have to track.
Just like a share of a company.
Just like a share of a company. Yeah, exactly.
Yeah.
So great that you're offering a solution to that problem. And is that maybe something you think you're going to explore in the future? Or
we might, but I think it's a possibility. It will need to have a little bit more of infrastructures around where you can have an easy way to transact those tokens,
Right.
for all the infrastructures. Otherwise, even though you have those contracts, you still have some sort of an exchange to be involved. So right now, private investors, and then if one after 6 months or whatever wants to be out, then we'll have to work out with finding someone who will replace him or something like that, who can actually pay him directly, or we can look it up in terms of internal exchange where we are by doing the internal directions on that. But it's really for those who are looking at this from a long-term investment, and like investing in real estate. I mean, I invest in real estate, and this is the reason why I liked Tezos. It has an aspect of passive income, where you invest in commercial property, you have monthly income that comes in from it, but you hold it for several years.
You also
So
have the
this,
asset appreciation on top of
yes,
that, on top of the income.
yes, exactly. Just like Tez, those have the potential. So the last slide 10 is showing what we have right now, and these numbers could change in the sense that we might. It all depends on what is the pressure and the value of Tez, and therefore there's less pressure for us in terms of the infrastructures. So the 7% that we have might go down to 6, and therefore the bond pool owners might get 9 or 10, and we leave it at 15% overall. Or we might bring that down 15% to 12%, and then reducing the 7 to 5. Or these are numbers we don't know yet. But right now, these are the numbers are there. But the only thing that we want to set things up to is our 15% is not going to go up. If it changes, it'll go down for what we charge to our delegators, while the 8% that we will give to bond pool owners will not go down, but if it changes, it will go up.
So that's very interesting there, and I'm glad that you offer that for the community, having a rate that you're saying will not go up. In fact, it could even go down, depending on other circumstances. So this is a good breakdown showing if you were to delegate to Hayek Lab, the 15% fee for a straight KT1 delegation, where that goes. So the 8% goes to the bond pool share for rewards to those holders. And then you have the 7% going to Hayek Lab, which again could be adjusted lower in the future. So it does pay off more to participate in the bond pool. However, you are getting rewarded for the additional risk, we can say, that you're taking, that comes with that process, and the limitation
the restriction,
of being exactly, held for that frozen period. So yes, and again here, it's great that you are able to be totally transparent on where the fees go, and then also providing that promise of not being going up on fees for the service that you're providing to the community. So you're doing great stuff for us, Phil. Thank you for this educational video on bond requirements. I know I, for one, have learned a lot from the slides that you've put together for us, and I'm really glad to have you on our show and spend the time with us and for the community to go over these sorts of things. So any closing statement from you, Phil?
No, that's it. Just an invitation for those who are interested in bond pool, and just to contact me.
Absolutely. So again, that's hayeklab.com. And please reach out to Phil if you guys are interested in participating in the bond pool or even delegating. He'll be sure to answer some questions for you. Thanks again. And thank you for watching Crypto Live League. Be sure to subscribe, follow us on Twitter, YouTube, Facebook, Instagram, cryptoliveleague.org. And if you guys want to come on for an interview, if you're watching, you want to come on for the show for an interview on Tezos or any other topic, cryptocurrency related or not, feel free to reach out to me at contactus@cryptoliveleague.com. Thank you for watching, guys. Until next time, take care.
Take care. Thank you.